and welcome to Ensuring Success 2023. We are so glad that you're here. We are live from AMS Pictures in Dallas, Texas, and thank you so much for standing by as we had a couple of technical difficulties, but getting them out of the way first thing in the morning is the best thing to do, so we're on track for 7 hours today and 7 hours tomorrow of free continuing education for all of you who are attending. I would like to introduce myself. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I very much want to thank the sponsors for this event who make it possible for us, and that includes ADP, Avalara, BotKeeper, Canopy, Instead by Cory, CPA.com, eFile4Biz, Relay, WriteWorks, SafeSend, SureLink, Wolters Kluwer, Xero, and Zoho. Avalara, as you can see, is the sponsor for this session. That's why we're all in orange today. And we're looking forward to a great session and a great lineup of sessions for you all day long. I'd like to introduce our panel here. We're joined by Cory Barwick and Dee Green and my co-moderator, Alexandra DeFelice, and I'm going to have each of them introduce themselves to you briefly. Cory?
Hi, good morning. I'm Cory Barwick, Senior Product Manager with Avalara. I primarily work with our accountants channel and the returns products that we offer for preparing and filing sales and use tax returns around the United States.
Hi, I'm Dee Green. I'm a partner at Bennett Thrasher in Atlanta, Georgia. I specialize in state and local taxes and sales tax compliance.
Alexandra.
And I'm Alexandra DeFelice. I am Director of Marketing and Business Development for Payne & Fears Law Firm in Southern California. I am Gail's co-moderator. I will be taking questions from the audience, and I am also the designated bell ringer to indicate that you need CPE.
Okay, and speaking of CPE, the way CPE works for this event is 3 times during this session. We'll take a quick break, and we will display on the bottom of the screen a number, a 3-digit number that you'll want to write down. When you have all of those numbers at the end of the session, after you've been with us for the whole session, you'll qualify for CPE credit. And in this particular session also, you'll qualify for IRS CE credit. And at any time during the day, during the week, for the rest of the year ahead, you can come to our site and click the CPE option and fill in those numbers and get your certificate. So there's not a rush to do it right after this session, but if you want to, you can. And also, I want to take a moment to just mention that if you have questions for our speakers or for our tech team or anybody, you can enter them in the Ask a Question box, which appears on your screen under the window where you're watching this video. So you can enter any questions there. We'll relay questions to the speakers as we can throughout the day. And I think that's all the preliminary housekeeping stuff I have. So we want to get started, and the first thing we're going to do is ask a question of our attendees to get us rolling. Alexandra?
Yes. So you will notice that throughout the day, this session and other sessions, we will be asking audience questions. These are not required for CPE, but it gets the panelists engaged. It gets us excited, and so we want to kind of put people to the test. We want to start out the morning. We got to get awake. We have to be up here for 7 hours. So the first question is it ethical to report estimated numbers on federal and state tax returns when actual numbers are not available? And you should see the poll popping up with some possible answers, and we will get back to those as we ask the panel the same question.
All right. And Cory, I think you had a story, didn't you, relating to estimated numbers?
Yeah, and so, you know, I want to be kind of crystal clear. Things happen, and we all know that sometimes our clients can't get those numbers to us. So in the past, in practice, I did have a client once that came to me and said, hey, you know it's that time of year. I know I got to report my federal and state and local income taxes, but I just don't have my books closed. And so we were presented with this challenge of, okay, you know, we've got to file this return or an extension by April 15th or October 15th. So we want to be as clear as we can be when filing those returns. So we did kind of go back to them and say, hey, just do your best. And once you get all of your numbers reconciled at the end of the year, once you kind of understand that that is locked in, we can go back and amend the return. It's better to file an amended return than not file a return at all, especially with late payment penalties and interest. You want to get something in and get it filed as soon as you possibly can.
Right.
And adding on to what Cory said, in being a tax attorney using some legalese, we call it the reasonable person or the reasonable man standard. So to Cory's, if we don't have the exact numbers, as long as we can point to a reasonable method of how we came up with those estimated numbers, then I think that an auditor might say, well, at least they tried. Like Cory said, you did not fail to file something. We came up with a reasonable person standard.
Mm-hmm.
Yeah.
Okay, so the choices for the audience were no, you must always report actual numbers on tax returns, even if that means that the return will be late. B, yes, if you do not have actual numbers to report to federal and state tax authorities, you may estimate what is reported and amend the return when the actual values are known. Or C, estimates fall under penalty of perjury. So no, you cannot be used on tax returns reported to federal and state authorities. So what is the correct answer?
B.
B.
And let's see, the poll results are 74% said B. Good job, guys.
Good job.
You guys are ethical.
All right.
We'll see.
We'll see.
All right, well done. So when we talk about ethics, before we get into more case studies and experiences that you guys have had, what are the sources of authority for finding out what is ethical? If you're just starting out and you need to, obviously if you've passed bar exam or CPA exam, you should have been able to figure that out. But just as a reminder for those who've been around for a while and maybe have forgotten what the rules are, where do you find those rules?
Yeah, I think, on the CPA side, and I'll let Dee address the attorney side, but on the CPA side, you go to the AICPA. They write all those rules that govern how you practice, and they make the standards that govern how a firm has to offer their services. So if you need to know something, you go to the AICPA rules, and that will tell you how to practice as a CPA.
Okay.
And similar to the AICPA, any of the state bars, we usually have to take an ethics exam as well as the state bar. Mm-hmm. So they have an ethics board, and you can also go to any of the state jurisdictions and look up what they consider as being ethical as well. So I would say similar to any of the state bar associations and the ethical departments.
Right.
So if you're functioning in different states,
Mm-hmm.
Is it best to just defer to the one that has the most strict laws, or what should you do?
So I am a very conservative person, so I do follow the conservative approach, but then go to the state as well that my client is operating in and that I'm operating in as well. And if there's a standard board like the AICPA, or if there's an American Bar Association, then following that. But I usually defer to the strictest standard or the most conservative standard.
So which are the strictest states?
So I think California, Texas, Washington, I think those are at least coming after sales tax and things like that, of that nature. The Wild Wild West, of course, they are always, so those, yes.
All right.
Yeah, and I would definitely agree with that. So, in addition to the AICPA, which governs nationally how a practice should present itself to its clients, each state has its own CPA board, and they will write addendum rules to whatever the AICPA puts out. The state boards govern the CPA exams, so if you're taking a CPA exam, if you're sitting for that exam, then it's the state board that is going to kind of govern your license and issue that for you, and then require all the CPE that goes on from there.
Yeah, and CPAs and attorneys, our license are in jeopardy if we are not being ethical. So it's not just about what our client wants, it's making sure that I protect what I work so hard for. So you can be disbarred, you can have a fraction put on if somebody searches you as an attorney, they can see that I did something that's not ethical, and it can be up there from 1 to 5 years. So you don't want that on your license.
Okay, this is huge, right? So I think we talked earlier when we were preparing for this panel about a kind of ongoing theme that you guys will talk about today, which is don't let your clients bully you into being unethical, right? So Because there's consequences. This isn't, you're not their friend, right? You can suffer, they can suffer, you can suffer.
Yep.
So can you talk about some examples either of like when kind of there's that crossing the line, and like how do you address that with a client?
Well, just as a baseline, I start off with my clients letting them know I am on your team. Now, if I'm on your team, but that means I'm going to have both of our best interests at heart. And I'm going to do I tell them I'm very conservative. The goal is to get you compliant and do that ethically. So as long as they understand that, right, and as Cory and I talked about, it's about making sure that you get what's done, but we have to do it the right way. So, and it's about educating people. So I feel like once you educate people, they don't really want to be unethical. They'll try to try you.
All right, we're going to take just one quick moment to mention that your first CPE code for this session is appearing on the screen right now. So you want to make note of that. There'll be 2 more codes during the session, but that's how you're going to get your credit for this. So, okay. I think the second question we had for the audience has to do with exemption certificates. And we also have some stories about dealing with people who are or may not be exempt. So let's post that second question.
We do. And this is the question that I'm about to send to the audience right now is when processing exempt transactions for tails and use. Wow, I might need a little bit more caffeine. It's still early here. When processing exempt transactions for sales and use tax, is it ethical to allow a customer to receive exempt status when they cannot produce an exempt certificate?
Yeah, so I have a story about that actually, and it comes from before I was a CPA. When I was a CPA, when I was in college, I worked at a small grocery store chain in the town that I was living in. And we knew everybody, right? Just like a small town. I mean, you know everybody. You know the restaurants, you know the businesses. And, you know, it never struck me as occurring to when those people came in and said, okay, I'm buying this produce for my restaurant. I need it to be marked as exempt. It never struck me that there was actually something behind that. And, you know, as time went on, you know, come to find out, we had a book like yay thick of, okay, here's the business name, here's their exempt certificate number. But, you know, it's very important to make sure you've got those certificates on file. Somewhere at some time, it's very important to make sure you've got those certificates on file, because when an auditor comes in, that's the first thing they're going to ask for. Hey, show me these exemption certificates. And you may get a nice auditor that will say, okay, you don't have them on file. I'll let you go back and collect them. But that is at the sole discretion of the auditor.
There's nice auditors.
There's nice
Wow.
auditors. There's
Okay.
actually
Yeah,
some nice
if you're
auditors.
nice to them, some of them will be nice to you.
But just remember, like, keep that in mind. That is at the sole discretion of the auditor. They don't have to allow you to go back and collect those certificates under audit.
Yeah, and a good rule of thumb I tell my clients, when you're onboarding a client, you should ask them for that exemption certificate up front. And some clients might not have it readily available. Exemption certificates are one of our favorite subjects, right? Because it's so much that goes into it. Mm-hmm. Not only do you have to make sure you're collecting the form, but is it the right form? Has it expired? Because like Cory said, somebody might have them in a book that's been around for 10 years. A lot of states, Florida, it's 1 year. Sometimes it's as soon as they make their first sale. So exemption certificates we can't force our clients to do anything, but as long as we're their responsive, trusted advisors and tell them, look, you need this exemption certificate. There's even sometimes where if I keep asking them, I'll say, I'm not marking that sale as exempt until you can prove it to me. And I'm doing this again for you so that an auditor won't come to you.
So are there trigger points where if they start selling different things, if they start selling into different areas, that for those in the audience, that you could say these are some questions, like for every session we'd love to have some key takeaways. What can they be giving, like a short list of questions to ask their clients to say this is what you need?
One familiar situation where if you hear somebody reselling something, so like if I sell you a product and then you sell it to Cory, that's a resale scenario. So you should know, in order for you not to have to collect sales tax to have to collect sales tax because somebody is going to resell that, then that should be a trigger, a resale, because you're not selling to the end user, and you're supposed to collect tax from the end user. So that's a trigger. It could be the product that you're selling. It could be what kind of your governmental institution, your religious institution. So if you hear something like that. But anytime I'm onboarding clients, I ask them, do you have exempt customers? Tell me more about those exempt customers. Who told you they were exempt? Do you have exemption certificates? So if you hear resale, government, different kind of institution, manufacturing exemptions. Does the state offer a business-to-business exemption certificate because you're selling it to another business? So, and as your advisors, we should know the different kind of exemptions that are available.
Yeah, I think just to kind of drive to drive the point home to what Dee is trying to make there are two different kinds of exemptions, right? There are product-based exemptions and there are entity-based exemptions. And one of the things that I found my clients getting in trouble with a lot is an entity-based exemption. It sounds like you don't have to collect an exemption certificate from them. When I'm selling to the federal government, when I'm selling to a state government, when I'm selling to a religious institution, it seems like I can just take that on face and move forward. And that is just not the case. Those entities are still required to produce a certificate to you to justify why that transaction was marked as exempt.
Yep. Okay, so what if it's on them? What if they're like, no, sorry, we don't have the certificate? Like, what are the?
And you won't mark it as an
Okay.
exempt sale, and you have to tell your clients that. So when you're onboarding and you tell your client you couldn't produce that for me, or you're not willing to, then I'm going to collect sales tax from you, and you're responsible for that, or you're going to have to accrue use tax. So it's kind of, and that the client has to look out for their business as well. If they do not produce that, then that sale should be taxable. Or the auditor is going to tell them, hey, you couldn't produce it anyway.
Right.
Okay. Do we want to see what the audience
Yeah.
thought about this? Okay. So the options for the answers were no, for a customer to receive exempt status and pay no sales or use tax on a transaction, you must have an exemption certificate in place, either on file with your business or in hands from the customer at the time it occurs. Yes, if you have the customer personally, if you know the customer personally, you can take their word that they are exempt. That's interesting. I love that word.
Definitely not that.
Just handshake, sure. Yes, exemption certificates are not required if you're willing to take the risk under audit that you will have to go back and collect the certificate when asked by the auditor. So, answer is
A.
And 85% said A. You guys are good.
They're still being ethical.
Still,
I have faith in you guys.
All right, what do we got next, Gail?
Okay, I think next we have a situation where, let's see, go through my list here.
Oh, are you talking about the question? I think I know. I think this might be the special Cory question. I think this might be the question about registering a client's business for federal and state taxes when you know that their business has been established for some time and their prior period taxes due.
Yeah, this is something that Dee and I were talking a lot about at dinner last night. And, you know, it's very difficult, right? And what we're starting to drift into here is really those ethical questions that you have to ask yourself as a practicer and how you're going to do that. But many times we have seen clients come to us and say, I'm not registered and I know I should be. And you know, they're seeking advice on how they should move forward with that and what they should do. And a lot of times people they don't want to pay the sales tax that they were supposed to remit prior to them coming forward and remitting it. And so, you know, what Dee and I were talking about and what we were sharing back and forth were stories of these clients that said, I know I need to register, but I just want you to say that I started my business today.
Okay, can you elaborate on some of these horror stories, because we want to educate our audience about what might really happen here.
Yeah, no, so when I was practicing, I had clients that would come to me and say, I know I need to register. I don't want to pay you to do a VDA. I don't want to file back returns. I don't want to do any of that. I'm willing to take the risk that under audit, someone is going to come and find me. And as a CPA, we tend to be less willing to push back on our clients when they come to us and ask these questions. We want the business, right? We want our firm to succeed, and we want as much revenue as we possibly can. But what we have to realize is that when it comes to that, that's perjury. That's you're signing a registration document on behalf of your client, and that's perjury. You are misrepresenting the facts to a state or federal government agency, and you just can't get around it. So I know Dee has had some horror stories as well.
Can you give us an example?
Yeah, and I would say just to give a high level of the life cycle. So let's say a client comes to me and I do a nexus study for them. During that nexus study, I identify to them the states in which they need to register for. And so, of course, I will do their registration for them. Again, as Cory said, I might say, hey, you have nexus back to 2018 or 2019 so we're either going to do a VDA or we're going to give you your options. So they'll go, again, can you put down 2023? And I, again, as an attorney, under penalties of perjury, I won't do the registration. I'm happy to help you do the returns going forward, but I won't be signing that document because, again, the goal is you're attesting to the state that, no, I made sales starting 2023 when you know that, and there could be ways the auditor could come to you again and say, hey, we talked to the payroll department, or we saw that you registered for payroll taxes back in 2018, which lets us know there's physical presence in the state. So you should have been registering for sales tax purposes then. So I tell my clients I will not register them. And I also, I do a CYA and do an email and say, hey, I recommended that you register in this state back to this date. And so they know, like, if they ever come back, they can't say that my firm didn't tell them. But Nexus is really the standard that they should go back to.
I love that, and that's, again, when we give a tip, we say, the CYA emails, not just for that, but for everything, right? And we're not saying out loud, I think you guys know what that stands for, right? But anyway, to have it documented that you gave specific advice, so if the client does not follow that advice, it's not on you at the end of the day.
Exactly.
Yes,
regarding the VDA, the voluntary disclosure agreements, again, is this taking a gamble? Because this reminds me of like when I was a kid and my mom would be like, just tell me that you did it and you won't get in as much trouble. I'm like, yeah, right, I'm not saying anything. Like, what is the difference in penalties? Like, are you really benefiting if you fill out a VDA?
Yeah, so that's the whole purpose. For volunteering to come forward because the state didn't catch you, they haven't got a hold to you yet, they're saying you volunteered to come forward, so in exchange, I'm going to wash your back, right? So they will waive penalties. Most states don't waive interest. Texas waives penalties and interest, so it's really a benefit. Cory and I were talking about how high the interest rates are.
I was going to say, how high could the penalties be?
That you can have a different level of penalty. So it might not be just a late filing. It could be an ethical one. It could be, did you do something egregious? So penalties can rack up. It won't be just the late filing one. So that really is a big benefit. But, and another thing we were talking about, a big issue with voluntary disclosure agreements, there's certain requirements that you must attest to again in order to qualify for that. That means like the state must not have reached out to you via notice, via saying, hey, you didn't pay this return. You must not have registered for that type of tax. So sometimes clients will tell you, I meet all those requirements. I can apply for that voluntary disclosure because they hear those benefits. And then I will file that VDA agreement anonymously, but then the state will come back to me and said, you got denied. So I'm looking at my clients like, why did I get denied? Oh, you mean that Nexus questionnaire when the state reached out to me? Or you mean when I did call and ask this question? Or I forgot, Cory registered me back in 2016. I forgot to tell you that. So then, I've now made my clients sign a document, depending on the state, to say I meet these requirements. Again, covering myself to say, we asked you this. It's not our fault that you got denied.
Okay.
Yeah. And penalties are definitely high. As Dee is alluding to, 30%, 40%. I mean, we're not talking chump change.
Like we're talking
here.
Tens of thousands of dollars.
Yes.
Would it be $100,000?
Depending on how much tax exposure you have, it could get up there into 6 figures quite easily, especially if you've got multi-states that you're doing voluntary disclosures in.
So it's worth it.
It's definitely worth it to cleanse your accounts and get those VDAs filed and in so that you can go forward with a clear understanding with the state. Hey, I have chopped off the look back period. You can't go back to when my business started, because that's in essence, like if a state fines you, that's how far they can go back to the date that your business started if you don't have one of these agreements in place with them.
And alternatively, if we can't do a VDA, another kind of, in a benefit for being ethical, we might get a penalty waiver, right? So Cory and I could reach out to the state and say they want to be compliant. They didn't do anything egregious. So in exchange for that, can I submit a penalty waiver on their behalf? Now, all states don't go for it, but they might say, okay, they hired Cory. They want to be compliant. 8 times out of 10, the penalty waivers that I submit, they accept them.
Wow.
And that's not just for VDAs. That's if I got a back filing and I write this cute little paragraph like, they hired me, they followed the reasonable man. I use all these legal words. But so it pays to be ethical. I heard somebody out there says it costs too much to be ethical. And I said, no, it costs too much to be unethical.
Yeah, definitely.
Do we have a second to see if the audience was ethical on this?
Yeah.
Okay, so the options were, yes, you must always do what your client tells you to do so that you do not risk losing their valued business to your firm. I don't know about that, but 3.2% did select that, by the way. Just saying. Yes, if your client confirms that they are willing to subject themselves to penalties and interest, if they are found out, then the onus has shifted from your firm to their business to handle the situation. Or C, no, when a CPA or an attorney signs registration documents on behalf of their clients, they're doing so under penalties of perjury and could subject themselves to civil or criminal penalties for making false statements. D?
C, the last one. Is that it was a C?
D meaning her name is D, not D. And, yes, this time, 85%, again, good ethical. We do have one more question, so we'll see how it's going. So awesome. Good job.
Okay,
guys.
and we want to take a moment to post your second CPE code on the screen for this session. So write down that number as well, so you'll be able to get your credit for attending this session. Okay, and speaking of clients being somewhat unethical, when we were talking yesterday, Dee, you mentioned a situation where clients may want to kind of fudge, or the word you used was finagle, the shipping address when they're sending things that are subject to sales tax.
Yeah, so for sales tax purposes, the ship to state is really of importance to us. And so based on the first question Cory talked about, if they don't, their books haven't closed, they might be like, well, Dee, we don't have the correct shipping address. Can you just put down the bill to? It's like, no, it's based on ship to. You cannot finagle this. We can't count that sale or something. So we have to go by the ship to address. If I ever use bill to, again, there has to be a reason why I use that approach and how I can point back to the auditor to say, this is the reason why we did this, and we can track back to it. But I had a story where it's a cruise ship, and the sale is marked as a Florida sale, but they were like, hey, don't mark this as exempt because the cruise ship is just docked in Florida, but they're going to consume it in the Bahamas. So really that's a Bahamas transaction, and that's international, so you're not going to tax that, right? And I'm like, no, we register you in Florida. The ship to address says Florida. It's a Florida sale. And they're like, no, well, my competitors are all doing this way. So again, and I always, as an attorney, like to research stuff too, because I'm on my client's team. I won't let them bully me, but I will give them the grace of let me research that and see if there's a way that we could do that. But usually it's the ship to state, and they cannot finagle that ship to state. I don't know, Cory, if you...
Oh, yes. No, I 100% agree with that. You know, the only time where ship to doesn't matter is when it's an intrastate transaction, right? And you've got states like Texas and California where it's the ship from that matters, but it's still the shipping address.
Yes.
You know, it's not the billing address. And I know sometimes that ship to information is just hard to come by, but that's how the law is written. And you've got to follow the law. If you don't follow the law, then you're being unethical. You're not doing the due diligence for your client that they expect for you to do. So you really have to follow that as it's laid out.
Yeah, and it's important to ask your clients questions. Don't just take at face value the facts that they give you, because as Cory said, it could be of importance where there's a drop shipment. Won't get into that right now because there's a lot of complexities there, but somebody could buy something from me and tell me to ship it directly to another state. Yeah. But we have to dig into that information and find out why does this seem like things are moving around. So it's important for your advisors to dig and ask more questions, because your clients will just give you the base level facts to get the answer that they want.
Yep, definitely.
Do you want to do the next question?
Sure. This is a great way to get the day started. Okay. Hey, man, I'm not usually awake at this time. So, okay, here's the situation. Scenario. I think this was added in after the fact, so I hope you guys saw this one. If not, we'll see how ethical you all are. You prepared a sales tax return on behalf of a client based on information provided by the client. After the return has been filed, your client mentions a substantial error was made in the information he provided to you, which would have increased his tax liability. What, if any, action do you take? And I'm going to send this to the audience right now, and we will see what the choices are as they're coming in. And the answers for you guys are. A, recommend the client file an amended return and pay the actual tax owed, keeping in mind that you can't force the client to do so. Continue your relationship with the client for future tax work. B, I think this one's a little bit more tricky here because we're getting all kinds of answers. B, recommend the client file an amended return and pay the actual tax owed and refuse to continue representing him if he does not comply. C, recommend that the client choose a wait-and-see approach to find out if the taxing authority will detect the error. Continue your relationship with the client for future tax work. Or D, tell the client, we didn't have this conversation. I think Gail added this, which like in the middle of the night or something. And continue your relationship as if the information about additional taxable income did not occur. Okay. Right now, there's like a tie between A and B. So you guys want to discuss this dilemma, and then we'll come to what the right answer is?
One thing Cory and I talked about last night, too, is we don't believe a lot of our clients want to be unethical, right? They want to be educated. And sometimes, look, we're human, right? So errors can be made. The books might not be closed, like he said, so substantial errors can occur. For me, with my clients, as long as you didn't intentionally do something, because in my engagement letters, I do have a paragraph to say, returns are filed on the base of the information that you provided to me, based on your ERP system, based on what's in Avalara. So I can only go on the information. I can't go inside your brain. But sometimes people make an error, and it's human error. So if I know that my clients was like, oh, this is a mistake, and they didn't finagle something, then I'm okay with amending the return. We have to amend the returns for all kind of reasons. Yeah. We also have clients who will say, let's take a wait-and-see approach. Just like our clients can't bully us, we can't bully them. As long as I say to them, this is my recommendation, you can make a business decision. I'm not going to do anything that's unethical. But if I believe that it was a reasonable reason why you did it, let's amend the returns. And let's make sure that we're paying the appropriate tax.
Yeah, I totally agree with that. You know, at the end of the day, humans are humans, and you know we all make mistakes. And it's like Dee said earlier, we know that 99% of the time our clients are not trying to behave unethically. They're trying to do the right thing at the end of the day. So, you know, we have to advise, okay, you now know what the correct answer should have been to file this return. And our recommendation is that you file an amended return. Now, what they choose to do with that is up to them. And then how that outcome plays out depends on how our relationship continues forward with them on a go-forward basis.
Yeah.
Okay, so it's literally like 49% said A and 50% said B.
Can you remind me of A and B again?
A, recommend the client file an amended return and pay the actual tax owed, keeping in mind that you can't force the client to do so. B, recommend the client file an amended return and pay the and pay the actual tax owed and refuse to continue representing him if he does not comply?
So I don't necessarily say refuse. Again, it's a lot of us have multi-year relationships with our clients, and you get to know them. You get to know them over time and know what their kind of intent is. And so I wouldn't say refuse unless I know for a certain, like, this doesn't pass the smell test and they're going to continue to do this. Like, they keep on saying this is a reason. Then I would refuse to work with them again. But I give most of my clients the benefit of the doubt because I've worked with them multi-years, and if they agree to amend it and pay the sales tax.
Yeah, agreed. Yeah, 100%. I think that's the right approach. You know, we want to do the right thing for our clients, but at the end of the day, again, humans are humans. We all make mistakes. And if you've got that relationship with your client, chances are you have come to know them and you know what they're going to do and how they're going to respond to an issue. So there's not really any need at that point to fire them unless they point blank tell you, I'm not going to file an amended return, and I don't care what you say. you know that, but that just is a conversation that you have to have with the client and let them know this is what our relationship may look like going forward if you don't take this advice.
Which is a great transition into a situation in which you might have to fire a client.
Yes.
A story. We want to share that story about that, Cory?
Yeah, so when I had first left public accounting and moved over to corporate, I had a client come to me and she was filing a California sales and use tax return. And, you know, great person. I'm sure that she was just uneducated, didn't really understand sales and use tax. That's why she was coming to implement our software and have us prepare and file her sales tax returns. But I remember this vividly. We were sitting in a conference room and we were looking at her California sales and use tax return. And she owed, like, let's say $50,000. Like, it wasn't something that she could just scoff at because her business was so small. And she had done things like we've seen with other small businesses. They had used the cash for some other payment. And, you know, first of all, you just don't do that because that's technically fraud. You're collecting that money on behalf of the state and local government that it's supposed to be remitted to. But we got to talking about her exempt sales. And she asked me, Cory, how can I reclassify some of my gross sales into exempt sales and save some of this money?
Kind of getting a little goosebumps while you're telling me this
story.
Yeah.
And you know, I was taken aback. Like, I had never been asked that question. In my 7 years of public practice leading up to that, I had never expected that kind of a question to be asked of me. And at the time, the organization that I was working for, we were a small startup, and my CEO was like, hey, you know, like, you've got to make the right decision. This is your call. What do you do? And she was adamant, I'm going to figure out a way to reclassify these transactions. And I had to say, you know, I'm sorry. If that's your choice, then we have to sever our relationship and we cannot move forward because that is 100% fraud. And I cannot be involved in that kind of situation.
And that's a really tough conversation to have, right?
It is a very tough conversation to have. I mean, CPA firms don't like firing clients. And law firms, too, I'm sure, don't like firing clients. But sometimes at the end of the day, that's what you have to do.
You have to do what's right, yeah. I fortunately haven't had to fire the client because of doing anything unethical. Again, like we talked about last night, most of the time that they don't want to follow my first recommendation, it's usually because they're like, let me see if I can wear a D down and not have to pay this sales tax. But once I educate them, as Cory and I were saying, they go, okay, let's do what's right. But a good transition that he was saying about reclassifying the sales, we have clients who want to reclassify what their product or their service is. So again, like I said, a rule of thumb is always digging deeper and asking your clients questions on the subject of taxability, what your product is. A lot of clients feel like they know their business, but because we do this, we know the difference between SaaS and downloadable. We know that, and we should be asking them the questions to keep poking holes to say what exactly you are. And so we'll have clients where I'll give them the law, and they go, oh, did you say if what was that buzzword again? Yep, that's what I do, Dee. That's what I do. Yeah. And I'm like, no, that's not what you said you do. And I went on your website. So a story that I had a client, they went through due diligence with another firm and everything. They thought that they were a SaaS provider. And
which for people that don't know what that is,
software as a service,
which would be like, what would be an example?
In the cloud. So if you access the program or the software through the internet, the cloud. It's not something physically downloaded on your computer, which most of us are in a SaaS kind of environment. But this client was actually a website developer, and I was asking them, "Are you selling a product to the client for them to develop a website?" No. I developed the website. So I'm like, so why are you thinking you're SaaS? And my competitors, they're SaaS too. And I'm like, well, no. And here's the prongs why you're a website developer. And I'm not going to reclassify that. You can go to somebody else and get another opinion, and you can also do what your competitors are doing. But I know this to be the law. Mm-hmm. And oh, by the way, with that client, they ended up having to pay sales tax in less states because website development was not taxed in as many states.
It's taxable.
Yeah. You also can have the flip side where if you were actually, let's say, website, you said you were website, but you were SaaS, you could have underreported your sales tax, and then the state can come back to you and say, hey, you're really serving this product. So we have to dig a little deeper. That's a good rule of thumb. Keep digging and poking holes with your client.
Awesome advice.
Yeah, and I think, Dee has really kind of outlined this quite well. And, I think this is where we start looking at technology to come into play to help make these decisions, right? There are a number of vendors out there that offer sales and use tax calculation for small businesses all the way up to the Fortune 100. And CPA firms can get in there and make sure that they've classified everything correctly within the software so that hey, if I turn on Nexus in a state where I don't have collection prior to me making my first sale, I know the software has already got the rules built into it.
Right. It seems like there's a lot to freaking stay on top of.
Yes. If you're doing it manually, there is a lot to stay on top of.
And that's why it's important, what he pointed out, and since Avalara is the sponsor of this session, it's good to have your advisor coupled with a software. Mm-hmm. So some people think it's a set it and forget it situation, but that's why it's good. You guys have heard me say I call myself the bridge over troubled waters. So some people don't understand the software. It's good to have your advisor say, thank you for purchasing that software and listening to my recommendation. I'm going to help you go in there to do what Cory said. Yeah. I'm going to do the configurations for you. I'm going to make sure all the switches are flipped. I can talk to Avalara. You should be focused on the business of your business.
Right.
And I should be doing all this other stuff to make sure you're ethical and in compliance.
Okay, so now, as a small firm owner, do I have to know all these, every single software that exists and have the bells and whistles and purchase it myself? Like, how am I supposed to stay on top of that?
That's why your advisor is important.
Yes.
So I was talking to them yesterday about how I know the software players. It's my job to stay on top of the software. It's my job, if they use Avalara, to stay on top of what's Avalara's new products. Do they have exemption certificate management? Do they have the ability to write custom tax rules? What is my client's needs? And then I look at the software that best fits their need. Like, they might think, well, I heard of Avalara. It's going to work for me. Do they have an API connection? So it's not their job to stay on top of all of that.
But so is it your job as the practitioner? Do you have to buy all that software?
I do not, again, do that. I make my clients sign a contract directly with Avalara. Okay. Once they sign the contract with Avalara, again, because there's so many risks in our firm that I have to pay attention to that my firm won't let me do that. But once they sign that contract directly with Avalara or whatever software provider, they will add me as an administrator. And I'm certified implementation partners with a lot of these software providers where they can say, okay, Dee, you take the wheel afterwards. Tag, you're in. But I want them to, just in case they don't pay that invoice with Avalara, I'm not on the hook for it.
You do so much CYA stuff. You're awesome. That's why, because she's illegal.
That's why I'm an attorney.
Yeah, because I work for law firms now. I used to be accounting. I'm like, oh, she's definitely illegal. Just talking about speaking with vendors, you're talking a little, we
have our little pointers here. It's time for your last CPE code for this session. So be sure to write down this as the third and final code to enable you to get your CPE credit for this session. Okay.
Sorry, thank you for, I didn't want to not enable people to get their CPE. So you were talking about speaking to vendors, and you guys were having a conversation last night about the difficulty with getting Amazon and some other people on the phone to get certain things for your clients. Can you talk about that and how to work around it, you know?
Yeah, so there, the issue I raised to you guys is marketplace facilitators, right? So the marketplace facilitators that have the law on the books about that they will collect sales taxes on your behalf and remit them. Like if you go to Amazon, they have they really did a good job of putting all the states that have marketplace facilitator laws on there, so they'll let you know where they're collecting. But then when my clients want me to do the compliance for the rest of the sales, most of the states ask for gross sales. So I need to know all your sales, including with Amazon.
Yeah.
And I'm not going to collect sales tax on the ones that Amazon already collects the sales tax. I don't want to double tax you. But it's so, Cory talked about that it's good to have automated solutions, and it's good for transparency's sake, but sometimes trying to navigate where to find the correct reports, because the clients, again, might be like, D, I know Avalera is collecting 25% of my sales. I don't know what 25% is. I don't know either. I need you to be able to tell me, are you selling, are you making sales of 50 million right now? And of that 50 million is 25%. So I think the software providers should do a better job of pointing to where you can find reports to help the clients be compliant. Because we can't get you on the phone. If we can't get you on the phone, we don't know where to.
So the reports exist. They're just not easy to find.
Yes.
Yep.
Okay, we have a few takeaways that we want to mention to you guys before we wrap this session up to make sure that you've got something to think about, some more food for thought as you leave this session. So I'm just going to read through this list real quick. Basically a recap of what some of the things we've said. Don't let your clients bully you into being unethical. We're on your side, but you're paying your advisor to be a trusted advisor. And as Dee pointed out, drafting CYA emails so that they get audited, so if they get audited, they can't say we didn't inform them. Also, if you don't remit, it's fraud. You want to educate your clients on the complexity of sales tax. And we want to also give a shout out to our friends Greg Kite and Caleb Newquist for their podcast, Oh My Fraud, which is available on Earmark CPE, which we recommend highly. And what about some final thoughts that you guys might have for our audience?
Well, you guys know the line I used last night, it's cheaper to keep her. You guys know the song. And cheaper to keep him or her because it's easier to pay me now up front to help you get compliant as opposed to when the state comes a calling and you're going to have penalties and interest. Always ask questions, like I said. Every client needs a team, and everybody has to play their role on the team. And just stay on the right side of ethics. If your gut, lean more to conservatism. I rather over-comply than to not comply at all. So, and we're here to help.
Yeah, definitely. I agree with that 100%, especially coming from the software side. We are totally here to help, and we partner with Dee and a host of other certified implementers that can go in and very easily configure your software to work with your ERP, and then it's just like magic. You know, it takes all that burden off of you so that your clients can stay in the business of their business. And as a CPA firm, as an attorney, that's where we want our clients to be working at every day. We want them in the business of their business and let us take care of everything else.
Again, we have just a couple final comments. We are pulling together for each session today and tomorrow a list of resources that are related to this session. References, links to sources for maintaining ethical standards. We'll have a link to that podcast, other things you might want to read. When we post the archived versions of these videos on our site, which should be within about 2 weeks, we'll also post the list of references that go with each session. So you want to come back to ensuringsuccess.com and find that. And I think I want to mention that we've got some words from our sponsor, Avalera, and they're going to be appearing right after we close this session, so stay tuned and watch those, and we will be back shortly at the top of the hour with our next session, which is Tales from the Remote Workforce. So we will see you then. Thank you.